I'd like to call to order this committee whole meeting of the Town of Saugeen Shores and extend a welcome to everyone in the chambers this evening. The first order of business is a declaration of pecuniary interest. Can I ask or remind every member of your responsibility to do so? You can do so now or when it arises on the agenda. Nothing. The next item is additions, deletions, or amendments to the agenda, and I understand we have nothing there. We have no delegations. So we're at 5.0, report of municipal officers of committees, and it's under general government. We have a staff report. It has to do with investment presentations, and our CEO will introduce our presenters.
Thank you, Mr. Mayor. Our acting treasurer had some car trouble and so was at the mercy of CAA and extends her apologies. So in May, Council considered a new investment management policy that broadened the potential opportunity for placement of funds that offered enhanced returns on longer-term investments. As part of the consideration of the document, staff offered to arrange presentations for Council to provide more information from both the One Investment Program and the alternative investment opportunities offered by our existing financial institution. We're pleased to advise members of the committee that Jason Hagan and Tom Bradbury from the One Investment Program will provide a presentation to Council first. It'll be followed immediately thereafter by Daryl De Silva and Daniel Namus from CIBC Wood Gundy, who are also in attendance this evening. Mr. Mayor.
Thank you. So I guess we're looking for Jason. Welcome, Jason and Tom. If you just come to the mic here.
Thank you. Thank you very much for having us here today. As Larry Allison noted, I'm Jason Hagan. I work with the Association of Municipalities of Ontario and the One Investment Program. With me is Tom Bradbury from the Municipal Finance Officers Association and also the One Investment Program. As you are probably familiar, the One Investment Program is jointly run by our two associations, and we run it strictly for the Ontario municipal sector. What we plan to do today, we had some discussions with Kate Allen, and what we had planned to do is spend a few months talking about the investment rules for municipalities, and then some of the considerations we have related to the One Investment Program and our operation of it. So at the outset, one of the things we do in our annual training for investments is we talk about the rules. And as most things in the municipal sector go, there's lots of rules governing what we do, sometimes too many. But the Municipal Act itself governs the operation of municipal government. Within the Act is the Eligible Investment Regulation. It's Ontario Regulation 43897. So the regulation is fairly lengthy, and it takes some time to get used to reading it. But one fundamental part of that regulation says that this regulation governs all municipal investments, as it would for boards and committees of municipalities. Anything that's governed by the Act is governed by this reg. And the reg in Section 1 makes it very clear. It says a municipality does not have the power to invest under the Act in a security other than a security prescribed under the regulation. So there's lots of gray area in regulation. This is one that is pretty clear, and it's refreshing in a way. There's not a lot of ambiguity around it. Pardon me. In terms of eligible instruments under the reg, just a very quick cursory summary. Many of them, most of them are fairly conservative and quite frankly, unimpressive. Government bonds, bank deposits, bankers' acceptances, things like that. These were carryovers from the old Municipal Act into the Municipal Act 2001. In late 2005, there was a significant amendment made to the regulation that gave the One Investment Program some unique powers. And it was through a concerted lobbying and discussion with the province that we got these. And those were shares of Canadian corporations and corporate Canadian bonds. So these are powers that were given to the One Investment Program, but not to municipalities individually, except corporate bonds if you had a credit rating. And it was only for shorter term bonds and less than 5 years in duration. Again, for about the past 4 years, the One Investment Program, LAS and CHUMS, have been pushing for broader investment powers, again, to keep pace with the developing financial climate. And we feel there may be some regulatory change this year tied into the Municipal Act review. So this is something that we do as a program on a concerted effort to help our investor municipalities. So without further ado, what is the One Investment Program? It's, in brackets, a commingled investment program for the public sector, established more than 20 years ago, and as I said, run by LAS AMO and MFOA CHUMS. We have a unique scenario where our program is overseen by our investors. We have an investor advisory board that meets 3 to 4 times per year, hears from our managers directly, and gives us input on to the operation of the portfolios and whether or not they're in the municipal frame of mind. And then we also have independent consultancies who come in and help us manage the managers, for lack of a better term. And as a bit of an update, since the time we built this presentation, we now have 103 municipalities that are using the program. So it's about 25%, 24% of municipalities utilize the One program. Slide 5 touches on the program structure. This is only designed to show you that the operation of this program isn't on the back of a cocktail napkin. It's very thought out. It's very proven. We've been using the same model for at least 15 years and in various iterations thereof before. But really what we try to do within the program is the investor deals with LAS and CHUMS, no one else, unless you're submitting investment or redemption instructions or seeking advice from one of the managers. We handle all the noise. We have the oversight. We have the compliance. We have the professional money managers. We handle all the service arrangements. All the municipality does is tell us what portfolio they wish to use, provide the directions to CIBC Mellon, our custodian, and then the monies get channeled to the professional money managers. And these firms are MFS Investments and Guardian Capital. So collectively, these firms each manage more than $10 billion each. So we're not a large client for them. We're certainly not a small one either. Our assets within the program are at $680 million today. Slide 6 shows, just at a high level, the 4 portfolios we offer: a money market, a bond, a corporate bond, and a Canadian equity. And again, these are consistent with the rules rule expansions we got in 2005. Each portfolio is designed for investment, different type of investment. None of them are locked in. They're all fully liquid. So if you invested in equities and the town made 10% in 2 years and you wanted that money out, there's no penalty. You can always pull it out. It's a pooled investment. But the reason we give an intended investment duration is to help the investor manage the potential risk with an investment. Certainly equities can be pretty noisy in the short term. You can win 20% or lose 20% in 1 year. So looking at the analysis and the history of these portfolios, what you see is that on a 5+ year basis, which Tom will show you later, equities perform in a very, very sound way. Shorter term money, obviously money market investments are very, very predictable, very secure, but you don't make the same interest rate on those for short term timelines. So again, different time horizon for different investment opportunity, all fully liquid, and there's never any penalties for getting in or out. There's no reason for us to do that. In terms of the holdings, money market portfolio holds T-bills, commercial paper, very simple liquid bank products. Our traditional bond portfolio holds government bonds, federal, provincial, municipal, some high-quality bank paper, etc. The corporate bond portfolio holds just that, Canadian corporate bonds, as well as some government bonds for liquidity. And Tom will touch on the corporate bond portfolio, as well as the equity one as well. So just on a year-over-year basis, what we wanted to show you is to paint a picture, and I know this was part of the deliberations the town went through with your new investment policy, was what's short-term, what's long-term. Asset management plans, what have these done? How do we have to think going forward? So what we wanted to point out here is you're not alone in these scenarios. Historically, the money market and the bond portfolio were the lion's share of the holdings in the One Investment Program. The corporate bond and the equity were, some people were using them, but certainly not as many as are now. Asset management plans pushed municipalities into thinking a different way. We realized very quickly that the assets that we hold, we can't think as a 4-year council term or a 5-year business plan. We now have to think 20, 30, 40 years out as to how we use development charges, what we're going to do with water rehabilitation, new roofs on arenas, things like that. Excuse me. And what we've seen is year over year, more and more of our money is coming out of our short-term products and being reallocated by our investors into the longer-term ones. They've recognized that a lot of the money has been sitting in short-term products year over year, losing opportunity. And we've also seen net new investments, as Tom will chat to. But this slide was solely meant to say not only have we seen program growth, but we've seen a reallocation from our short-term products into our longer-term ones. With that, I'll pass it to Tom.
So as Jason mentioned a couple of minutes ago, as municipalities are forced to come up with enough assets to, or enough money to replace assets in the future, they've had to move, or it's recommended that they move some of the holdings that they have to longer term holdings. That chart on the right-hand side there, risk goes up the vertical axis and return goes across the horizontal axis. So down on the bottom left-hand corner, you have our money market product, bank GICs, 60, 90-day bank deposits. Below that, you could bury it in your backyard or under the mattress. And as you move up toward the top right-hand corner, government bonds, corporate bonds, finally stocks, and off the top you'd have lottery tickets and horse racing. So I guess the point is, as municipalities decide how they're going to amass the funds they require for long-term asset rehabilitation, it's prudent for them to move some of that money out into the higher risk stuff, if it's going to be there for long enough. And I'll show you some slides in a minute that will bear that out. That is a list of some of the holdings that we hold in the Universe Corporate Bond portfolio. You'll notice that some of them, John Deere, Caterpillar, Wells Fargo, they would seem to be U.S. bonds, but they're U.S. corporations that issue bonds in Canada in Canadian denomination. Canadian equity portfolio started in January of 2007. Year prior to that, the government of Ontario gave the One Investment Program, and only through the One Investment Program, an opportunity for municipalities to invest in Canadian equity only. When they did that, that gave us a bit of a problem. About 70 or 75% of the Toronto Stock Exchange is trees, rocks, oil patch, and banks. If you compare that to the world sector weightings of all the stocks issued worldwide, that would be about 40%. Because of that high ratio in the TSX of those four sectors, we used the worldwide sector weightings and applied that onto the TSX. So it's much less volatile than the TSX would otherwise. So through our money manager, Guardian Capital, this shows somewhere about 50 years of historic returns from the Toronto Stock Exchange. Includes dividends, but there is no management. So it's the whole Toronto Stock Exchange every year for the last 50 years. But includes all the losers as well as all the winners. The column on the left, the 1 year rolling returns. From January 1, 56 to January 1, 57 would be one year return. And then from February 1, 57 to February 1, 58, ongoing. There's 702 of those in 50 years worth of data here. You'll note that 26% of the time on those rolling one-year returns, it's a negative. And the lowest one-year return is minus almost 40%. As you move right and make the rolling periods longer, the chances of a negative return keep becoming less. When you get out to 7 years, in this 50 years of data, the chances of having a negative return are zero. And you'll also notice that the average period return for all the 5 to 10 year rolling periods gravitates toward 9.5%, 10%. We got this from our third-party consultant. Again, return is up the vertical axis, and risk donated by standard deviation is on the horizontal axis. I'm not even going to try to explain that. But the X on the dotted line, that is the average Canadian mutual fund return for all of the mutual fund providers in equity. The return around 7.4% 5-year return, and a little more risky than the Toronto Stock Exchange. The block up on the top left, the red block, that is actually the one investment program equity portfolio. So it's a much higher return with much less risk. That's a little bit of a comparison for one-year returns for each of our portfolios as at May 1, 2015. Again, one-year return equity portfolio in the purple, just over 14%. At the end of July, one-year return equity, 9.65%. All net of fees. Any of the returns we put in any of these presentations are net of all the fees. Probably the most convincing is the far right. Bond return since inception in 1993, I believe, 4.86% net of fees. For the last 22 years, it's returned 4.86%. Corporate bond fund since inception, 2008, 5.26%, and equity since inception in 2007, and that includes a 30% dip, late 2008 and 2009. Annualized 5-year return, or annualized return since inception, over 7%, 7.07%. Back when we were originally going to make this presentation, staff here asked us to make a comparison on a $5 million investment. The first column shows a third in the bond, a third in corporate bond, and a third in Canadian equities. The data is 15 years from January 1, 1999 to December 31st, 2014. Again, it's rolling 5-year periods. You invested $5 million along that continuum somewhere. The average return for a one-third split, balance at the end, 6.948%. Or the return actually is $6,948,000. So the total would be $11,698,000. Compare it in the gray, and the source of that data is from the Bank of Canada website. 5-year GIC comparison, minimum 2.08, max 853, and the average 4.11.
So the point with what Tom was showing is certainly we have no permutations as to what a municipality should invest in. That's a discussion that has to happen at the local level. But the products are there, and you can see that the returns do prove to be of value when you compare them to GIC options and things of that sort, which are the common do-nothing scenarios for a lot of municipalities. They've done what they've done because they've done it. And when you look at these broader investment options, now that you've done cash flow forecasting and an asset management plan, you get a scenario where if you know that $1 million of the $5 million is truly long-term, it's a development charge, you can invest it as such and bolster the returns for the municipality. In terms of fees, very quick chart just to show you, we're not-for-profit corporations. We're not out to do anything more than keep our butts in chairs helping do the work for municipalities. So the fees are, for example, corporate bonds are 45 basis points. That's 0.45% per year. For example, I hold mutual funds of my own portfolio. MERs can be anywhere from 1.5% to 2.5%. So certainly far higher than what we can offer or what we do offer through the One Investment Program. And from that, what you get is everything from soup to nuts: reporting, compliance, personal visits if needed, quarterly reports for the program, statements, online balances, etc. And something I just wanted to touch on in passing, even though it was outside the scope of the request we had from town staff, is a new product we launched. Simply put, we had municipalities coming to us saying, if we can get primeless 1.75% or whatever return through the bank, how come you can't get a better return? Got us to thinking that we might be able to, so we issued an RFP in December of last year for a Schedule 1 bank to offer a high-interest savings account under the name of the One Investment Program. The CIBC was the Schedule 1 bank that won that RFP, and we offer a high-interest savings vehicle in partnership through them as the One Investment Program. These rates are a bit dated. With the prime rate change in July, we're now returning 1% today, and as the program grows to 100 million and 150 million, the return rate goes up for every investment in the program, not just those that are the large investments, but every investment will grow in terms of its effective return rate. So we try to help, as I said, for everything from the short end to the long end. And with that, we'll call our presentation off, and if there's any questions, we're happy to answer them.
Thank you. Questions for these gentlemen? Councillor Grace.
Hi, thank you for the presentation. Just on the last slide that you presented, is there a fee? What's the fee for the?
That's already built into it.
It's built into it. Okay.
Yep.
A clarification, just so that I heard right, when you were on slide 14, and you said that the return was, the average return was 6.948 million. Is that over and above the original $5 million investment?
Yes.
What I thought. Okay, and so are dividends included in
The equity program?
Yeah.
Yes.
Thank you.
They're not paid out. They're reinvested.
I have one. If it goes back to your the slide on the One Investment Program structure, and you may have mentioned it, but I understand how at the board, but I see there's One Investment Advisory Committee, and who makes that committee up, and how are they selected?
Perfect. I did not address that in regard for time, but Mayor Smith, the committee is comprised of equal representation appointed by MFOA Chums and appointed by LASAMO. What we look for in the committee is twofold. We look for threefold, I guess. Investors and non-investors is one paradigm. We don't want everybody to be our best friend. We look for subject matter experts. So, for example, the Director of Treasury Services for the region of York sits on the committee. He manages a portfolio of over $1 billion. So we look for some subject matter expertise, people who investment is their job in municipal government. And then we look for generalists, so treasurers that have everything from soup to nuts under their portfolio. What we're looking for from that committee is the program operating in a way you're comfortable with? Are you satisfied with the type of products we're investing in from the managers when they report? And are you satisfied with our output, our reporting, as well as our training? So we're looking at them as kind of our general oversight committee. And then the third-party investment consultant that sits on the advisory committee is a third party. Again, we hire her on a retainer basis to tell us how our managers are doing. She doesn't work for either of the managers.
Councillor Grace.
Sorry, one more question I meant to ask, and this is for Sue, if I may. Have you talked to any of the other now 103 municipalities that are using this program at all, or do you have plans to do that?
Through you, Mr. Mayor, yes, we do definitely intend to talk to the other municipalities. We haven't done it yet because we're in the very early stages of this whole operation. So,
Councillor Myatt.
Thank you, Mr. Mayor. Thank you for your presentation. So back to the question of the average, the 6,948,545. That's based on the average rate of return.
Yeah, and I want to make that is the total value at the average end of a fund.
Thank you. It's not 11,940,000. Thank you.
That's the total value.
My math wasn't adding up here.
That's
Okay.
It says value of $5 million at the end of 5 years.
Okay, because the statement earlier was it was plus, and it wasn't adding up. Going back to based on the one-third bond, universe corporate bond, and Canadian equity, dating back to 2008, when some portfolios, if not invested properly, were, there were losses on paper of upwards to 40%. And I know this maybe is a difficult question to ask you this evening in short course, but if that same scenario was to happen with a downturn, like was experienced in 2008, what would that mean to that number?
Well, this data covers that downturn. This data is from 1999 to the end of 2014. So somewhere along the line, you'd get that minimum number, and that would include the 1 year 30% downturn.
Right. I understand it's 15 years, but if the investment period was a 5-year period, right?
Well, this is based on 5-year rolling periods within the 15 years of data.
Okay.
So that somewhere in here, there's a bunch of 5-year rolling periods that would include the 30% downturn year.
There's always that, when we're dealing with municipal public funds, and and you invest $5 million. Obviously, we're not. I don't see ourselves being in the business of taking the $5 million and having a appreciated value. But over a 5-year term, I understand the rolling number, and we'll be seeing more, Mr. Mayor, I guess, in a couple weeks' time through our treasurer, and this will explain it further again in the report with some recommendations, no doubt. Thank you.
Further questions? If not, then thank you very much, gentlemen. Oh, sorry, Dave, did you have a question? Sorry. Councillor Dave Myatt.
Yeah, I'll get one under the wire here. Thanks, through you, Mr. Mayor. You mentioned that the Municipal Act regulates the type of, or prescriptive of the type of investments that you can make. And you said that their lobbying is going on for changes to that regulation. What type of investments are you expecting will be included in a new list if the new list is put out?
What we expect and what we might get are two different scenarios. However, what we've been pushing for, what we do is every year we talk to our managers and we ask them, when you compare our very restricted portfolio versus what you would do for a broader, more broadly enabled investor, what's different? BBB bonds is one. Right now, the one investment program can't hold any bonds related below the A grade. BBB is investment grade, so we would like to have the ability to have some exposure to those bonds. One of the other ones is in our equity portfolio, real estate income trusts. And
as they call it, shares of Canadian.
So that's really what we're looking for, are those two pieces of the puzzle. More broadly, what we said is let's forget about the legal list approach completely and give us the prudent investor standard and allow a professionally managed investment to manage as any prudent person would. We're not confident that will happen this time around, but certainly we've asked for sub changes as well.
So there's no expectation that foreign equities would be included in that list?
Not unless the prudent investor standard were granted. Okay. But under the sub-ask, there was just the two other components.
Over time, as we get additions to the current list, province, they move very incrementally. I would suggest if they were going to give us anything, it wouldn't be prudent investor, but maybe shares of U.S. corporations. Wouldn't, yeah, I can't see it moving that quickly.
They're not going to throw the barn door open.
No.
Thank you very much, gentlemen.
Perfect. Thank you very much for your time and consideration today.
Thank you. Thank you. Next, we have Daryl De Silva, and he's here with CIBC Wood Gundy, and I know you have a couple other gentlemen with you, and please introduce them.
I will do that. Thank you, Worship. Councillors, thanks for inviting us. Mike, thanks for your support and word spread. We were at the OSIM conference in May of this year, so we had a couple presentations at that venue as well. Tonight I've brought along with me Daniel, who's going to be speaking Pacific product, specifically in the sense of opportunities in that sense, not Pacific product because they change all the time. And I'll talk a little bit about what me and Colin do back in our office working with the trading desk out of Toronto and how we facilitate different things for the municipalities and corporations that we deal with. The biggest thing we do is understanding our client. That's everything. I don't care if you're a retail client, a municipality, or an RESP, which is important to a lot of people as well. We really have to understand what the investment policy statement. I know yours was changed in May this year. I know it started in 1999. We have to understand that because those are the guidelines that we follow, and you follow them through the Municipal Act as well, which we are diligent working at all the time, and dealing with our treasuries, which is normally where we deal. So I apologize for my speaking, but normally we go right into the office and deal with the treasurers at the different municipalities across Ontario and Canada from that side of it. So we all realize the fact is, and yourselves, is everybody wants higher returns, but greed sometimes isn't a good thing. Just like I'm sure you all know that because of the uncertainty of the market. Also, as the gentleman before, timelines, everything is correct. Timelines are important. When do you need the money? What does that basically give you the time to do or recover on that side of it? And Daniel's going to touch on that a lot more in depth, product specific. I'm not basically talking on that. I'm touching on what do we do in order to facilitate the trades for our clients, whether it be corp bonds, AA rated, governments, municipals. We have the restrictions that we have not only through yourself but through the Municipal Act that we have to follow from that side of it. So a little background, in a sense, we are working in collation with our institution, that's CIBC, the banking side, from that side of it, and we're also working with, like I said, Daniel and the CIBC product area within the portfolio PPNs, Principal Protected Notes, the note area. We must follow your IPS, which I'm familiar with, that was sent to us, thank you, and also the Municipal Act, which is what we refer back to all the time on that side of it. So single A is out of our question from our side. So, present low interest rate environment, we're aware of that, but again, you can't be greedy. We try not to be greedy. I won't be greedy. I'm the wrong guy if you want to be greedy. No doubt about it. So some of the solutions we've had to come out with, and like I said, Daniel's going to touch on it, we have to look at alternatives, but we have to take into consideration the Municipal Act. It is the godsend and your own investment policy statement and your own needs analysis. When do you need the money? When is it required? What do you want to look at on that side of it? Because it is municipal money, it's taxpayers, I'm a taxpayer, you're a taxpayer on that side of it. And how do we match the money market needs or the investment needs, whether short term, whatever it might be? Do I roll them over personally? No. I always have an objective at the end of the day. I'm not there to turn a bond that might be 3.5% because I bought it 4 years ago. I'll wait to maturity. You can make some money on it. But where am I going to go? What am I going to do with it next? I want to make sure I know what we started with and where we're going to end up. So pretty simple process from that side of it. We have the support of our bond desk on that side and also people like Daniel that come out and visit municipalities with us and make sure we do the right things for our clients along with the treasurers and your own selves. So with that note, I'm going to pass it over to Daniel to get specific about some of the different opportunities that might be out there.
Thank you, Daryl. Good evening, everyone. Councillors, Mayor Smith. Nice to meet all of you, and thanks for having us out. And so, as Daryl had alluded to, I'm Daniel. I work in a product group, which is it's called Structured Solutions. And so it sounds a lot like we do. We come up with customized solutions that we build for generally high net worth individuals and also municipalities. Over the last couple of years, the popularity of this product has been growing very quickly within the municipality, hospital, nonprofit sector. And I think that's born out of the same needs that we've all kind of come to learn about and have probably been talking about for some years now. Persistent low interest rates and, difficulty meeting our needs, but we're not also keen on taking on additional risk because when you buy equities, we never know what might happen. We know historically what's happened. We know longer term is better, but we're never sure. And so what we create are something called principal protected notes. Now, a principal protected note is a I have the clicker here. Sorry. A principal protected note is it's a deposit note. So we're not talking about buying equities. We're not talking about buying securities. They're deposit notes rated by the Bank Act, and so they are eligible investments for municipalities. So we know capital preservation is a top need here, obviously. No treasurer wants to go back to the council after 5 years and say, so, you know, that thing we bought, we lost 3% on it. It's not a pleasant conversation, and I feel it's not a conversation that anyone ever needs to have. There are enough alternative options out there that you don't need to put yourself in a position where you would take on that risk. You still have other ways to increase your yields, and that's what we're here to talk about. The problem with the current market in GICs and fixed income and staying within your investment proposal the way you know has been tough going forward. Rates are now, prime at 2.7. 5-year GICs and things of that nature are not going to cut it. We were talking earlier, and I was saying an example would be, if you have a son or a daughter who's saving to buy their first car, 20 years ago we might have been able to say, put some money away into a GIC every month, and at the end of 10 years you're going to be able to buy the car. If I were to give my child that advice now, 10 years from now, they'd be further than ever from buying that car because the GIC is not earning money at the same rate as inflation. Every time you buy a 3-year GIC, you're guaranteeing yourself almost that you will have less buying power at the end of 3 years than you do today. So what that's done to us is put us in a position where we need to look for other ways. We need to look to beat that 2% benchmark, and we also don't want to expose ourselves to all the risk that owning only fixed income has. We've been in a world of falling rates for the last 15 years at least, probably 20 years now, and we've never really had the major concern of a serious rising rate environment. But if we all own fixed income and all we own is fixed income and rates start to go up, those bonds are going to be worth less and it's going to look really bad on our book. It's going to put people in a tough position. So this solution is going to help us get around some of these issues by giving you a product that is not linked to interest rates. We do not depend on what the rate is to generate your return. We will be linked to the equity markets. And as has been alluded to earlier tonight, over the long term, equity markets can significantly outperform what you get in fixed income. You just got to be able to stomach the risk. And what we're going to do is remove that downside risk from the equation. And so we'll move on and we'll talk about these products in a little more detail. So we'll start by, why would you want to purchase CIBC notes from, principal protected notes from CIBC or Daryl or myself? And, we've been in the principal protected note business for a long time. The first principal protected note was issued in Canada in 1994, and it was issued by us at CIBC. Almost every structure of structured note, every type of these products was originated on our desk and then had spread out to the street. So we are the originators for this. We've been given awards for Product of the Year. Bloomberg has rated us, the strongest bank in the world, or one of the strongest banks in the world. I think we were 3rd and 4th in 2012 and 13. This year and last, we were named the Derivatives House of the Year, which matters. That might not sound like something important. It would matter in this product because it's considered to be a derivatives product. And so it's just saying that we are a good bank for these types of things. On top of that, Daryl would be your advisor, and so he'd be available for any sort of consultation. He'll be there to help you create these products and to analyze your needs and see how we can put those into a structured note. On my end, we'll provide a website with private access so you can check in on your products at any time, see how you're doing, find out any details about them. You'll also have access to myself and our desk and any questions you might have from us. And there's daily secondary market on all of our products. They're absolutely liquid. There generally is an early trading charge in the first year. The most common would be a 3.6% charge that would decline by 1 basis point every day to 0 after 360 days. So our products are not intended to replace your 1-year and 2-year money. We generally look at products of a 3-year term or longer. However, should you need to get your capital out, they trade daily and are totally liquid with no fees whatsoever after the first year to sell. So moving on, again, as I had mentioned earlier, these products do fit into the Municipal Act. They do fit into all, nonprofit investment policies because what I'm selling you is a bank deposit. It's not a security regulated by the Securities Act. It's a bank deposit regulated by the Bank Act. And what that means is it ranks equal to any CIBC senior debt. So if you have a savings account, or if you have a GIC, or if you have a high interest savings account, all of those things would rank equally to this product. So in terms of, your risk level on this, it is the same as CIBC savings or any other CIBC subordinated debt. It's rated AA- by Fitch. So this fits into the policy and what we're allowed to do. Again, it provides safety in that all of these products are 100% principal protected, at least. So if you were to buy a 5-year product from me, the worst case scenario at the end of 5 years is that you get your money back. Even if your 5th year ended in mid-2009, late 2008, you get your money back. If that's not good enough for you, we are able to structure these products with a minimum return built in. So if you say, you know what, I don't need a chance at making 10 a year, we're not looking for 10 a year, we're looking to get 4 or 5 a year and beat what we're getting on our fixed income, then we might be able to structure in a minimum of 50 basis points or 1% per year for you with some additional room for upside. And what we'll talk about next is how we might do something like that. So here's an example of one product that we would do, and this is not equity linked. This is an interest rate linked note. It's the only one of this type we're going to talk about, but it's just to give you an idea of what structuring really means. So, you could buy a mortgage. You could buy a fixed rate mortgage or a variable rate mortgage, right? You could have one where you know what your rate is, or you could have one that's going to float with, whatever the government and the banks decide to do. So what we could do with rates is do something called a collared floating rate note, where essentially imagine a variable rate mortgage that has a ceiling and a floor. And so that's what we're doing. So here we're telling you we'll give you 85 basis points per annum, which is slightly less than what you'd get on some of the more competitive high-interest savings accounts out there. No matter where rates are, even if they cut rates to 0, or it's like Japan or Switzerland and rates are negative, you'll still get that 85 basis points. If rates start to go up, you will go up with them. So if rates go up next year and the 3-year BA or LIBOR, which is the rate we are linked to here, goes up to 1.5, you'll get 1.5. Your ceiling in this example is 2.5%. So if it goes up to 3, you would still get 2.5. But what we're doing is giving you a product that's going to let you float with rates, because most people are of the view that over the next 2, 3, 4, 5 years, rates will start to go up. And if you lock something in for 5 years now and rates go up, you're not going to go up with them. You're going to keep that same rate that you locked into. In this situation, it will allow you, your return will increase if rates increase. And if rates decrease, you know you have that floor in place and you're not going to earn less than that. So this is a simple example of how we can take something like interest rates or a GIC style product and customize it in a way that might meet your needs a little better. So this is the only interest rate example we'll talk about, but there are a number of things we can do with rates. But what I really wanted to talk to you about today are our equity-linked principal-protected notes. And, we spoke earlier about equities and how there are a number of ways to access equities for most people. For municipalities, it's generally through the One Investment Program. And again, this is not an equity, but it will give you exposure to equity markets. So as has already kind of been discussed, rates are very low. It's hard to earn higher returns on fixed income product. However, we've seen that, markets like stock markets, Canadian and U.S., on average return much more than that 2 or 3 or 4%. On average, they return that 10, 11, 12% range. The problem is we don't know what year is going to be the bad year, and we don't know, when we're going to get that money or what we're going to have to go through to get that. So what we're going to do is give you a portion of the return of the market, a generous enough portion that, as long as things chug along at that average 10% a year, you're going to do much, much better than you would have in fixed income. But if they don't, your money is protected. And so this example here is a very popular one that we've done with a lot of institutions, and this is linked to Canadian banks. Now, Canadian banks, on average over the last 25 years, have done 13% a year in price return alone. So, as has been mentioned earlier, equities can do very well. 13% a year is a very good return. I think any of us would be happy with that. However, you'd have to deal with the volatility to get that. So what we'll do for you is, on a 5-year term, we'll give you 60% of whatever the return on the whatever the price return is on the Canadian banks over that 5-year period. So if the Canadian banks are, on average are worth $50 on day one, and then, we have a really good 5 years and they're worth $100. I'm just using that example because it's simple math. And they're worth $100 at the end of 5 years. If you had owned the banks, you would have doubled your money. In this product, you would have made 60%. So if you gave me $100, you'd get back $160. If the banks only go up 10%, you'll get 6%. We're just going to give you 60% of whatever the price return is, and if they go down, we'll give you back your money. And so that's a very simple form. If you don't like banks, that's okay. These are totally customizable. If 5 years, if you want more than 60%, we could say, well, we can go 7 years, and we could offer you 80% of what the banks do. That's where you guys will be able to sit down with Daryl, and you'll go through your investment policy statement. You'll go through, when do we need cash coming due? What kind of term length can we put into these? Are we comfortable with Canadian banks? Would we rather own the broad Canadian market? If the Canadian market is too heavy in financials or rocks or trees, I liked your line there, then what we could do is also link to U.S. equity. It's completely up to you. And since you're not buying securities, it doesn't fall into those restrictions of the Municipal Act of, you cannot buy U.S. corporations. You can access U.S. corporations through these products. It's Canadian property, it's still a bank deposit, and it's currency hedged. So the currency fluctuation is not going to impact you at all. In these examples, we're using Canadian product because we're Canadian and it's familiar. But again, these can be linked to commodities or U.S. equities or whatever it is that you and Daryl think is the right fit for your needs going forward in your return expectations. If you look on the bottom left corner, kind of the bottom in general of the slide, these are some hypothetical, these are the historical returns and hypothetical examples, just so you can have a bit of an idea. And again, we all know history does not predict the future, which is why the principal protection element of this is great. To answer the question that was asked earlier, if 2008, 2009 were to happen right now, I can confidently stand here and tell you that the worst thing would happen is you'd get your money back. And if we structured it with a minimum return in it, the worst thing would happen is you'd make the minimum return. However, if markets do well as they have for the last 7 years, in this example, the average 5-year return in this product would have been 49.38% at the end of 5 years, a compound return of 8.4% per annum. Now, that's without having to risk any of your original principal. And that's why I said earlier, there are ways for us to try and earn higher yield here without having to risk any of your money and being able to go to bed a little bit better at night. And then on the right, you have just a histogram showing on average how often over the last 25 years you would have earned X amount. So 64.7% of the time it would have matured with a return of greater than 30%. 3.5% of the time at the end of 5 years you would have gotten your money back. And as I had mentioned earlier, these are fully liquid. It will trade up and down, not with the same volatility of the stock market. If these banks were to fall 20% tomorrow, let's say, the note would be worth less than the original $100 you gave me. It would maybe be worth $95. But you don't have to sell it. No one's making you sell it. And as long as you hold it till the end of the 5 years, all of the guarantees stay in place. But it's nice to know that if we were 1 year in and it was worth $105, you could say, you know what, we did 5 in a year. I'm happy with that. You can have a conversation with Daryl about maybe selling it at that point. There would be no fee to sell after the first year. So the opportunities to get out of there, but the peace of mind is there knowing that as long as you hold it to the end, we're contractually obligated to provide you with what we said we were going to provide you with. Let's move on. I don't want to take too much of your time. The next example is similar to the last in that this is still linked to the banks, but now we're going to go out 6 years and we're going to build in a minimum guarantee. Works the same way as the last one, except now the worst case scenario is at the end of 6 years, you get 3% back. We're going to build in 50 basis points a year, and at maturity you get 3% or 60% of whatever the Canadian banks did, whichever is higher. So if you look at the histogram on the bottom here, you can see that you would have made that 3% return 0.7% of the time. You never would have done worse than that. And 71.6% of the time, you would have made more than 30% at the end of 6 years. Oh, yeah, sorry. I'm bad with the clicker. Sorry about that. This is the slide we're on now. So yeah, this is, we're gone out another year, so it's 6 years, so you get a little bit more. We can offer you a little bit better terms the longer you go. And so in this example, we gave the same 60% link to the banks that we did in the last, but now we have 3% per year, 3% at maturity guaranteed built into this. And that's kind of what you got for going out an extra year. We were able to offer you that minimum. And that minimum could go up to 1% a year, and that would just mean that 60% would probably go down to something like 40. But again, it would depend on what you agree on with Daryl and, what's worth more to you. Would you rather have that extra worst case scenario built in, or would you rather have a little more of that upside potential? And that's why it's kind of, these are not a pool with yourself and other municipalities and other people. It's going to be built specifically for this city and its needs. We're going to move one more slide on, and this is another example very similar to the last. I don't want to waste too many time on them. They're all very similar. This one is just linked to the broad TSX 60. As I had mentioned earlier, it doesn't need to be Canadian banks. It can be whatever you guys want. This example is the TSX 60, which are the 60 largest publicly traded companies in Canada. It's the best, representation we've got of the Canadian market. And if you were to link it to the TSX 60 instead of the banks, we'd offer you that same 3% minimum at the end of 6 years and 40% participation in what the index has done. As was spoken to earlier, over 6 years, it's just short of 10% per year. So on average, you would make, just short of 4 a year in something like this. And as you can see on the bottom, the rolling average 6-year return was compounded of 3.5%. The next slide, we're not going to talk about it too much. It's just another example. This time it's 6.5 years, and we've used a basket of stocks. And again, it's just to show that if you really wanted to, if anyone in the room or someone in Treasury has always wanted to try their hand at being a portfolio manager or a stock picker, this would give you that opportunity to pick the 20 stocks you like the best and give them a whirl. And if they go down, at least you're going to get the money back. And if they go up, everyone's going to throw you a little party, and it'll be great, right? So, but again, it's just really to show the flexibility on these products. Anywhere from 3 to 7 years, we can link it to almost anything that you want it to be linked to, and we would work together to find out what fits best for you guys. So we are almost done here. This is just a table. We're not going to walk through the whole thing, but I would recommend you look at it. This just shows you using the broad Canadian market or the Canadian banks, what you might be able to do on different time frames. So if you look at the 5 years linked to Canadian banks, you would see that, with a minimum return of 2.5% at the end of 5 years, I could offer you 40% of the return of the Canadian banks. If we remove that 2.5% minimum, I could offer you 60%. And those are the kind of conversations that we'll have together with Daryl to really see what fits best. The next thing I'm going to show you is how a lot of municipalities are utilizing these products in their books. Some people can just you can buy one and take a chance at, we're going to buy this index over this term. But what a lot of people do is, like their bonds and their GICs, is they ladder these out. So this is an example of a laddered portfolio of principal protected notes. It starts in year 3. We buy 2 products in year 3, 2 in year 4, 2 in year 5, 2 in year 6, and 2 for year 7. So now after the 3rd year, at the end of every year, you're going to have X dollars coming due. So those cash flow needs are met. It's just like rolling your GICs. So we know that at the end of 3 years, that product, if we put $2 million into the 3-year tranche, worst case scenario, you're going to get back the $2 million. Hopefully you'll get back the $2 million with some variable amount that's linked to the returns of the market. And so this portfolio is just we did 1 banks product and 1 broad market product, $1 million in each every year for the ladder out to 7 years. On the next page, we'll see how that portfolio would have done. And so you can see the 3-year tranche, which was comprised of 2 separate notes at $1 million apiece, historically on average would have returned 8.21%, or a return of $164,250 on the $2 million that were put into that 3-year tranche. The most recent 3-year term would have returned 6.79%. On the 4-year tranche, historically, on average, over the last 25 years, you would have made 20.2% on the 4-year tranche, or just over 5 a year simple interest. The most recent 5-year term, you would have made 7.5%. And so these examples go on. On the 7-year portfolio at the bottom, historically, on average, on a $10 million investment, you would have made 4.179400. And that is a 41.79% return. In the most recent 7 years, you would have made 25.18, and that would have included 2008 and 2009, because it would have started at the worst time you could have possibly started. So that's a good example of what it would have been like, actually. That's just one 7-year chunk from July 2008 to July of this year. So you would have absorbed the full hit. But you still would have done okay. You would have made 2.517 on your 10 million, almost 2.518. On the bottom here is just a simple slide. These products, this asset class of structured notes, have been the fastest growing asset class in the country, actually, for 4 years straight now. And not just in municipalities, in regular, everyday retail books. I think we can probably understand why. It's a hard world out there. People are still a little scared from 2008, 2009. Nobody wants to go through it again. And people are frustrated with interest rates. And so a lot of people have been turning to us to to find something that'll give them an opportunity to do better. They'll say, hey, I'm making 1% of my high interest savings account. And what I can say is, well, for an opportunity cost of 50 basis points of that 1%, I can give you a chance to do much better. Is that fair to you? I'll be able to guarantee you 50 basis points a year. And then, with that 50 that you're giving up that you would have gotten on a high interest savings account, you very likely could get 2 or 3 or 4 or 5% a year in exchange for that 50 basis points. So, the variable element is not guaranteed. I wish I could guarantee 5% a year. But, we can guarantee an amount and really give you an opportunity to significantly outperform what you're doing in your fixed income product while still having that peace of mind that your money is protected. And so this has been going well with municipalities and hospitals so far, and hopefully we'll have an opportunity to try and structure something for you guys that'll meet your needs. And thank you very much for your time. I hope I didn't speak too fast, and I hope I wasn't too confusing. Any questions?
Thank you, David, and thank you, Daryl. So any questions of these gentlemen? Councillor Mike Myatt.
Thank you, Mr. Mayor, and thank you again for the presentation. I guess I want to make the comment that Mr. Mayor, that I look forward to receiving the report from our Treasury Department. When you take a look at our current rate of investment at 1.25 on our savings account, it's equivalent to about $60,000 per year, roughly, non-compounded, obviously. And if you even double that amount, to 2.5%, that number of $60,000 per year jumps to $130,000 per year. And I think I look forward to the report coming back from the Treasury Department. I think there's opportunity to invest in a little bit wiser way. And again, I just want to thank you for your presentation. I don't really have a question. I think I understand most of it here. And but thanks for your presentation.
Thank you.
Councillor Grace.
I have just a couple of questions. If you have an equity-linked note, are dividends included in that?
No. So as I had alluded to earlier, that it's based on the price return of that share. And so I'm sorry, I should have explained what that means. So stocks have a price return and a total return. The price return is just simply the price of the share of that stock. It does not include dividends. Okay. So to get the dividends, you would have to take on the risk of owning the shares. We also do not get the dividends, by the way. A lot of people who see these products say, hey, if I'm getting 60, does that mean you're getting 40 in the dividend? And the answer to that question is no. Actually, we don't own the stocks, and you don't own the stocks. We build these products using bonds and derivatives, and at the end of the day, it's a promissory note, like a GIC. We have an obligation to pay you what we say we're going to pay you, and we have to do that. And so we are not keeping the other side. And one other thing I should have mentioned is also, we make our money up front by lending out this money. So I say there's that 1 year early trading charge. And so, like a savings account, if you put your money in a savings account, the bank takes that money and loans it out to businesses. And that's how they make money on your savings account. So when you give me that money, I know that I've got it for 1 year. And if you take it out, I'm going to charge you for that. And so, through that 1 year, we know we can loan out that money. So that's how we're making money. And with regards to the advisors, there are no MERs, there's no trailers, there's no management fees on any of these products. So if you give me $100 and the market does, 10%, which means, and you're getting 60, so let's just say you give me $100, you're supposed to get 10, you get 10 cents on every dollar that you give me. You're not getting $100 of exposure minus a fee, and your return would not be the 10% minus a fee. If I say I'm giving you 60% of the price return of the market, you get 60% of the price return of the market on every penny that you put in as principal.
Okay, so that I think I wanted clarification, because at one point you said, after you talked about the early withdrawal fee charge, you did then say it's fully liquid.
It is, yeah. So you could sell it during the first year. You would be charged for that. Let's say you were to give me it usually starts around 3.6%. So and declines by 1 basis point a day. So after half a year or 180 days, it would be 1.8%. After 270 days, it would be 0.9%. After 360 days, you could sell it at whatever the listed price was. It's just the NAV, the net asset value of this product. It could be worth $102 or $98. That's going to depend on the market. But yes, after that 360-day period is done, you can sell it any day you want at the posted price, and there would be no fee. If we're 6 months in and the thing's up $6, market's doing really great, and you say, hey, I'll pay the 1% to get out because that's still 5, that's fine, that's your choice. But it does have full liquidity, and it has full liquidity net of fees after 1 year.
Okay, my last question is, is there a threshold for the minimum deposit note return? So is this based on saying if the portfolio decreases by, say, 40%, you get the amount? If it goes 45%, it would be over the threshold of...
No. In terms of the protection
Right.
amount? Yeah, no, there is no protection threshold on these. The market, could go down 70% tomorrow. That rule still applies, that
Okay.
your money is protected. I will state, they're not CDIC insured, so the government is not protecting your money. CIBC is protecting your money in the same way that, if you were to put more than $100,000 into a savings account, you're relying on CIBC because CDIC wouldn't cover more than that $100,000. So this is similar to that. CIBC has to exist for you to get back your money. That would be the rule. You guys would be in line. If CIBC were to disappear, it would be treated like people who own GICs or have savings accounts.
Thank you.
Vice Deputy Mayor Huber.
Thank you, Mr. Mayor. Since you brought CIBC in there at the end, I'll just ask a question that has somebody who deals with investments on her own. I have a pretty good relationship with the people that listen to me and offer the odd bit of advice and laugh at some of my advice to them about what to do with my money. I'm just curious. We have dealt with a local branch of the CIBC, so we have the ability to literally drive down the road, walk in, and talk with people. What is the service expectation? You mentioned a couple of things along the way, and it was, a website and this. I'm just curious, what is the service that you would provide to a municipality of our size that's the distance that it is from Toronto? Because I'm assuming you're based out of Toronto.
I'm based out of Toronto, but I'll speak quickly to that. So your relationship is not directly with me. I'm an expert in structured notes. So structured notes are one product that a municipality could use to help enhance their return or just to diversify their holdings. Daryl is an investment advisor, so his job is to advise municipalities and corporations and individuals on what to do with their money. So you would have complete access to me, and when it comes to these specific products, you would have access to our website and our team, and we're very friendly. We're absolutely happy to help. I'm on the road all the time. If you were to need me out, you could call Daryl, you could call me directly, and I would be happy to come here. Your main relationship would be with Daryl, because he would not only help you get access to these products that I'm offering, but to GICs or high interest accounts. We're not saying do this and do nothing else, right? It's just a part of a broader portfolio. And so Daryl will be the one to advise you and help give you access to all those things. And maybe Daryl.
From a service point of view, I'm a 35-year banker guy and CIBC. Service is number one, Canada Trust, that's right. But we rely on my team, which is a team of... We're actually in Picton, Prince Edward County. So from my point of view, I travel because I love this product. I take pretty low risk, so I'm okay with all that. We're available to that. We also have an ILON banking deal at CIBC now. Some of the municipalities on their own. I prefer to do it for you because it's a click of a button. Work on that side of it. That's what the relationship is with ourselves.
Yeah, instead of driving down the road to CIBC, you would call Daryl and you would make him drive here. That would...
I have no problem, but my dad did say as I brought him up here. So I am going to check. But we do work all across Ontario. I was the national sales guy at TD. It's not about that, it's a service side of it.
And sorry, just very, very quickly, CIBC, the branch, unfortunately, I'm in no position to tell you to deal with the branch or not. CIBC, I love them all. They wouldn't be able to sell you these structured notes, though. These are only available through IROC licensed advisors, so that would be Daryl or someone at that level.
We were talking to your commercial banker, actually. We were supposed to be here. He was going to attend that evening. Attend tonight, but a lot of the looking for alternatives. We work together to try and make it.
Thanks very much, Daryl and Daniel, correct?
Yes, that's right.
Yeah, thank you very much.
Thank you.
Thank you.
And It's
everybody.
a lot of information for us all here this evening, and I appreciate
It is a lot.
I appreciate both presentations. So thank you.
Thank you.
There is a recommendation that accompanies this report, and I'll read it. It is that the information contained in the presentations from the One Investment Program and CIBC Wood Gundy be referred back to staff to make future investment recommendations in accordance with the new investment management policy. Any questions or comments to that? If not, then all in favor of that recommendation. Opposed, if any, that's carried. Thank you very much. The next item on our agenda is the general government staff report. It's about an election sign bylaw, and our clerk, Linda White, will present.
Thank you, Mr. Mayor. As previously reported by staff, the new sign bylaw does not regulate election signs. A draft election sign bylaw regulating the location, size, placement, removal of election signs, and the enforcement of such bylaw is attached to this report for committee's consideration. The regulations provided in the town's sign bylaw adopted in 2010 restricted the size and height of the election signs on the road allowances to 1.5 square meters in size and 1.25 meters in height, and the attached draft bylaw maintains these restrictions. The 2010 sign bylaw provides that signs can be erected the day after nomination day and requires the signs to be removed within 1 week of the election. The draft sign bylaw also maintains these requirements and further provides that provincial and federal election signs can be erected after a writ for an election has been issued. The 2010 sign bylaw established a 2-meter setback from the travel portion of the street allowance. In past practice, the 2-meter setback from the travel portion of the street allowance has been difficult to administer due to the varying designs of urban and rural roads. The proposed bylaw restricts signs from being placed on the travel portion of the road, including the gravel shoulder where applicable, the center median, traffic islands, and on a sidewalk. However, the bylaw does not impose a specific setback. The bylaw restricts signs from being placed so as to impede the visibility, restrict vehicle or pedestrian movement, or pose a danger or a hazard. The proposed election sign bylaw imposes a number of regulations that are intended to provide clarity and enforcement provisions. And a summary of these provisions contained in this draft bylaw are provided in this report. And I'll just open it up to questions.
Thank you, Linda. Questions? I guess I'll read the recommendation, and that council consider the attached election sign bylaw. Questions? Councilor Grace.
Mr. Mayor, my question is on the addendum to the bylaw, the column, the chart. And so I'm just wondering about number 1, the penalty for removing a lawfully erected sign and the fine of $100. Is that one sign or one incident?
That's per incident.
Thank you.
Thank you, Mr. Mayor. My question is related to I've had some discussion with Linda about this. I just want clarification. We talk about the bylaw enforcement officer as being somebody who is going to police this bylaw, and then it says enforcement is item number 9, the Provincial Offences Act. How are the two linked? So that'd be one question. He or she, as the bylaw enforcement officer, will execute number 9, or that just becomes how does a ticket written, or how is a person brought to the attention that they've violated this bylaw? And the second part is that in our other bylaws where we talk about the bylaw enforcement officer, and this I have discussed with Linda, is that we define what the bylaw enforcement officer is by definition. So is that something that we can see in a revised version before it comes back for approval? Thank you.
Certainly adding a definition of bylaw enforcement officer can be added to this bylaw before it's brought forward to the council. With respect to your first question on how this is enforced, so obviously education to the candidates is the number 1. We're going to inform a candidate if they put a sign in the wrong location and ask for it to be moved. It's only the set fines are applied when there's non-compliance with the bylaw after somebody has been asked to comply with it with respect to placing the sign. So a bylaw enforcement officer would actually be able to issue a ticket for the fine that's approved by the court. And the bylaw enforcement officer is the bylaw enforcement officer, but under the Police Services Act as well, a police officer can issue a fine for a municipal bylaw.
Deputy Mayor Charbonneau.
Thank you, Mr. Mayor. I just had a question about, with regard to the timing of the introduction of this bylaw and its potential passage in 2 weeks, being in the middle of a federal writ period. Is there? I mean, at this moment there are signs on roadsides throughout the municipality. Do we run a risk, Linda, of by passing this bylaw, changing the rules midstream in the midst of the federal election and thereby disrupting the federal election in any way? I think. Is there any likelihood at all that we could cause a disruption by passing this before the 19th of October?
I see very little disruption because basically we've kept the exact same size of the sign. The height of the sign remains the same as what's in our current bylaw that's in effect. And yeah, so there's very little risk. I don't see any opportunity here that would have any effect on the federal election signs.
That's good enough for me. Thank you, Mr. Mayor.
If there's no other questions, then I guess I'll just call the vote. It's ready for information, but all in favor of the recommendation. Opposed, if any, that's carried. The next item on the agenda is Environmental Services and Transportation Staff Report, and it has to do with an expression of interest for OSIFA, and our Director of Public Works, Stuart Doyle, will present.
Thank you. Recently, the province announced a second uptake for the application-based Ontario Community Infrastructure Fund. As we're aware, that fund is two $50 million parts. One is the $50 million, which is the application-based. The other is $50 million that we get is the fixed formula-based funding that we saw at the start of this year, and I think Kate discussed. Last year, the town applied unsuccessfully for Bruce Street stormwater upgrades. This year, staff's changing the approach in project selection in an attempt to secure funding. We had applied for Bruce Street, I think, on 3 separate occasions and had been denied in all cases. An expression of interest that describes the project rationale and financials is required by September 11, 2015. As another note, and I think we did discuss it at budget last time, the projects we did apply for, in speaking with the representatives, were not declined due to merit, but due to the financial situation of the corporation. The OCAF grant is a provincial application-based fund, again $50 million. The projects are to be funded at a minimum of 10% by the municipality. The existing Port Elgin water tower was installed in 1989 to serve as the community of Port Elgin. The current tank is a steel welded tank that has continued to show deterioration, mainly due to corrosion. When the tank was originally installed, there was no cathodic protection included, nor was there any type of ice diffusing system installed. The Port Elgin Tower Replacement Project is currently identified in the multi-year capital forecast in 2016 and has been discussed in previous council agendas. In 2008 and 2013, staff had robotic video inspections completed to assess the condition of the tank, and based on the inspections, the interior welds on seams of the plates where corrosion is affecting the bead of the weld. The lower sections of the water tower indicate that vertical scabs are showing signs of oxidation and pack rust. The painting of the Port Elgin logo is showing clearly from the inside of the tank, and the exterior of the water tower is seriously pitted by vandalism and the elements. It is proposed that a new glass-lined tank, bolted steel tank, be installed to reduce maintenance costs and have a lower overall life cycle cost. By submitting this expression of interest, Council is in no way bound or committed to any projects or funding in the future. The specific program guidelines do indicate 2 selection criteria as noted here. One interesting point would be on number 2, the last sentence, is that consideration will be given to municipalities that are proactively investing in infrastructure. I'm not sure that's new, but perhaps that's something we can key on a little better this time around. So the financial impact is as follows. Those are strong numbers. We're concerned about the American dollars. A lot of these products do come from there, so we're hoping it could become under that budget, but we're using those numbers in the expression of interest stage.
Thank you, Stuart. Then the recommendation is that Council authorize staff to submit an expression of interest for the Ontario Community Infrastructure Fund for the replacement of the Port Elgin Water Tower. Comments, questions? I'll start with Councillor Minaj.
Thank you, Mr. Mayor. Having been on council and voted for the 1989 installation, I'm happy to talk about it again today. What I would like to do is, did send out a picture to members of council showing an observation platform built on such a structure, and wondered if there was an opportunity to, much like a lighthouse, to broaden our horizons and make it available for other user groups. Maybe a platform on top of the tower, and maybe a circular stairwell in some form. It could be constructed at the same time, one and only chance, and would offer an opportunity for a number of different groups to take advantage. Photographers, astronomers, communications, fire department communications, lookout towers, all kinds of other opportunities that would be enabled. And this is like, it is a one chance in 40 years, 30 to 40 years to do such a thing. Thank you.
Do you want to try and address that, Stuart?
I can do my best here. So we did look at an alternative design where we look at a standpipe style, which is the tank over a concrete base to allow for some different characteristics. The price would almost be double just for a standard one, and the line I got from the group that we're working with is that it's cheaper to store water on water, not water on concrete. So if we have an elevated tank like what you're speaking about, I think that generally costs quite a bit more than what we're looking at as just a straight standpipe. However, we can look at options. Again, it would just come down to the budget is where it would go to.
Councillor Grace.
Thank you, Mr. Mayor. I just have a question about the vandalism issue that you mentioned, Stu, in the report, and I was just wondering if this would be considered by the people who are giving out the money. How much of the damage is due to vandalism, do you think? And I'm just wondering if they might be asking us, if we're going to give you this grant, what are you going to do, or what strategies can you employ to try to deter vandalism in the future?
Okay. So I think the internal corrosion would be by far the largest concern that we have. One of the ideas that we've had is beefing up, beefing up security sounds a little more robust than what I mean, but try to enhance the protection of the tower. Unfortunately, it's difficult to stop folks from throwing rocks at the base, and we'll never stop that. However, as part of the application, security will be addressed as part of that.
Vice Deputy Mayor Huber.
I'm not sure we should be building lighthouses out of water towers. However, I do agree with Councillor Minaj that there is a place in any consideration for anything in this community to be creative and artistic and outside the box and realize that everything we do has the potential to create an attraction. Having said that, living half a block from the Southampton Water Tower, it is iconic in the community. You see that blue thing from lots of different angles. The pings of the rocks getting thrown against it are evident too. So I wouldn't be so quick to completely discount the idea of multiple purposes for a functioning structure. However, it's a little bit too early for that in my mind. I appreciate very much your thoughtfulness in the report that you've isolated out one line that maybe we haven't given enough attention to in the past, that proactively investing in infrastructure. So, 3 times you've kicked at the can, you haven't moved it very far. Finding something that might, just give a little different focus to something is good. I also think that, this, the health and safety thing, water's big, we are fairly close to Brockton, and, so it would be a good shot. I think, though, that it would be interesting for us going forward, if there's an opportunity beyond this expression. It would be interesting for all of us to see what the grant application really looks like. And I know we've seen a couple over the years, because the creative juices around this table, sometimes you never know when one of those little sparks might play into this, because I would agree that, you know, there would be something kind of cool about the ability for people to get up high to take pictures. That's what we do with the Chantry Island Lighthouse Tours. I don't know if this is the project for it, but you know, it's an icon. It will be an iconic structure if it happens. So we should always be thinking creatively and aesthetically about whatever we do. But if we have some success with the expression, I think it would be nice if during the preparation of the grant application, we all saw the form. And so, you know, if any of us has a good idea that can play into, because, you know, we've tried a couple times, haven't been successful. Let's see what else we can throw at them this time. Thank you, Stuart.
Thank you. If council wants to provide direction for an enhanced water tower with enhanced characteristics, that would have to come at an early date here, as we do have to have this EOI in by after the next council meeting. So this was just enough time to get the resolution passed. So if council wants to provide direction to that end, I'd be happy to take it. However, I would have to change the financial impact considerably to accommodate some type of creative or different structure, I guess, as we want to call it.
Be mindful of what the criteria is in here also. It talks about very specific about what is eligible with this $50 million. So, I mean, you need to be very careful that you don't get out beyond those and give them a very good reason to say no again, because they've said no to us on very good projects in the past, and I think we need to be very careful with that. Sorry. Councillor.
Thank you, Mr. Mayor. Through you to Stuart. When I read the report, the part about it says the painting of the Port Elgin logo is clearly visible through the inside of the tank. I'm trying to imagine how thin steel has to be that it becomes semi-transparent. And if that is in fact the case, do we have a security issue here that this tank could be to the point of rupture at any time soon? I'm just trying to think from a community safety point of view and reliability. Are we really at risk here? Because this it is steel after all, and I have yet to find steel that is anywhere semi-transparent.
So thankfully the Port Elgin logo is at the very top of the structure where the steel is its thinnest, and perhaps we did get a good day of sunshine directly at that spot. I could send you the photo. It is actually quite interesting. I could certainly circulate that. We are not, in our estimation and from working with these consultants, concerned about an imminent failure, no. However, we don't want to get to that point either.
Sorry, Councillor Madison.
Thank you, Mr. Mayor. So if our grant is declined, what process do we have in place to replace the water tower because of its construction at the moment?
So right now it is included in the capital forecast, and it would be funded through the user fee system. 2016 we have to undertake for I think it's our water license, undertake the financial plan. So that would be incorporated into the rate study that we would have to collect on the water and sewer rates, well, specifically the water rates on this, to finance that type of project, because the Southampton water tower has also been discussed and is in the future capital plans.
No further questions, then I'll ask the question. All in favor of the recommendation? Opposed, if any? That's carried. So the next item on the agenda is a communication or petition for Committee of the Whole action, and it's a letter from the Bruce Area Solid Waste Recycling about, well, I'm sure everyone's read it, but if you want to speak to it, Councillor Rich, if you can, go ahead.
Yeah, through you, Mr. Mayor. So in last BASRA meeting, Vince, who's the head of the corporation, had spoke about loss of revenues because of declining costs in aluminum, and a number of reports, not in Saugeen Shores, but in other municipalities, about scavenging. Apparently there's a person down in Brockton who goes by with a truck and trailer and takes all the aluminum cans out of everyone's recycling on the side of the road. So, and then there are also some places like up in Sauble Beach where they have bins to collect cans for other organizations, which in turn reduces the amount of revenue that comes in for Basra, which in turn reduces their profits, means that it's less likely we'll be able to build the expansion, which does keep people employed in this community, and at the same time will increase the costs overall for having our recycling done. So there was quite a bit of discussion about what we should do about it, and Vince had requested that all of the representatives come back to their host municipalities and talk about a bylaw which would eliminate scavenging. And I don't know if a bylaw is exactly where we need to go, but we certainly need to address the issue if it's indeed going to increase the cost to taxpayers. Because I think from certainly my perspective, my job as a representative of this council is to ensure that that corporation continues to make good profit and that we keep the costs for recycling low for taxpayers in this community. So when you compare something like Basra, the way in which we collect recycling, we don't take Tetra Paks or things that other municipalities take, but we take a lot less to landfill as well. If you go to a city like Toronto, they take about 30% of their recycling to the landfills. So what we want to do is continue to offer great service, but at the same time we want to make sure that the cost remains relatively low. So an example of a sample bylaw from Peel Region read something along the lines of, no person other than the region, its employees, occupier, owner who set out the waste, or other persons who authorize by law to do so, shall scavenge, pick over, sort through, collect, interfere with, disturb, or remove waste set out for collection, whether contained in receptacles or otherwise. So that's the kind of thing that they were looking for, and I welcome any discussion.
Thanks, John. Vice Deputy Mayor Huber.
Thank you. Through you to Stuart, do we have something already about regular garbage? Like, is there something that says that as soon as it's at the curb, it's municipal property? Because I've witnessed this actually on my own street. It wasn't a trailer, but I was really stunned because when asked, "What are you doing?" Every week we come and get the cans. It's like, well, why are you doing that? So. I would be curious to know if there was some way that, at the very least, we could, some habitual, like the person with the trailer, like we could do something about that. So I would ask for some direction on how we could see if that's possible.
I think that probably the way forward for us here would be to suggest to staff to come back with a draft, investigate how effective these bylaws are, and come back with a bylaw that may be effective for us. It's for us to discuss. Deputy Mayor Charbonneau.
Thank you, Mr. Mayor. I would oppose any such bylaw were it to come forward. I don't particularly like the idea of getting between Basra and its customers. Speaking as a customer of Basra myself, and I think we're probably all customers of Basra around here, I've never been communicated to about this at all. There's never been any outreach. I'm not particularly also interested in having Saugeen Shores step in as the heavy and tell people that they can't donate to the Shriners, that recycling can't be used to benefit good causes throughout the municipality. Basra has a problem here, and Basra should talk to their customers and try to solve it. It's probably no secret, I hate regulation. And new regulation, I hate more than old regulation. I hate it with a passion. I probably hate it more than I hate anything else in the world. And I think we don't need to jump there first, is all I'm saying. It's like with a certain politician. I'm not saying never. I'm just not saying right now. And so I think, though, that's the key thing, is that Basra has an opportunity yet to reach out to their customers, to explain this issue, and to say, there's consequences to having this recycling go somewhere else. To be besides Basra, not only your taxes go up, but I mean, I think my colleague Councillor Rich sort of understated Basra's great track record here. Not only does it send very little waste to the landfill, it sends zero waste to the landfill. Zero waste. I think Basra should get that message out to the public and say, look, you have this great recycling organization that's recycling everything you put at the curb. Support it. And if they did that, I think that would be the place to start. Anyway, reach out to their customers and talk about the downside of this behavior. And I'd like to see that happen. I'd like to see that roll out first before I would support any sort of new regulation from the town of Saugeen Shores trying to solve this problem. And I also heard from Councillor Rich that it isn't much of a problem in Saugeen Shores. And the only thing I hate more than regulation is regulation to solve problems that don't exist. So I think that we need to make sure. We need to ask Basra. I think we need, we can ask for a bylaw to come back, I suppose, if that's what counts. But I think we also need to go back and challenge Basra to do more, to reach out to their customers and try to solve this problem short of new regulation. Thank you, Mr. Mayor.
Vice Deputy Mayor Huber.
Just a couple of things. And let us all take note that Councillor Charbonneau, or the Deputy Mayor, doesn't like regulation. I think reserve funds have been surpassed in terms of his passion in the negative. I'm curious to know if I saw somebody outside with my blue box and they were out there picking stuff out of it, could I call the police about that? Just in whether there's an answer, I'm just throwing that out there. But my question was really more of a comment to Councillor Rich and perhaps I should just send an email, but it's interesting when you talk about zero waste to the landfill from Basra. Recently, the papers have had a number of articles from Owen Sound in particular about what they can recycle there, and Tetra Paks are on their list, as are milk cartons. And at the time I thought, geez, how come we don't have a depot here and we work out a deal with them over there and truck it all over there? So just take that back, because there is a municipality nearby that's doing that. But I would like a little more information. I do like the Deputy Mayor's comment, though, about reaching out to customers, because certainly I know that I don't put ours out early enough for somebody to scavenge ours. So certainly there's opportunities with timing of when you put it out. But glad to know that regulation is on your list too. Thank you.
Thank you, Mr. Mayor. Just as a response to the Vice Deputy Mayor's question, I think that once you put your garbage or recyclables out on the curb, there is no expectation of ownership or privacy. So, yes, you could go up and challenge them and try to personally shame them out of the activity, or take them away and put them back in your garage. But I don't think there's any kind of prosecutable offense unless we pass a bylaw.
If there's no direction, then I guess we'll move on to the next item, we have 10 items for communication of petitions for our committee of the whole information. There are 10 items listed there. Comments? Councillor Mike Myatt.
One question, comment, I guess to you, Mr. Mayor, and if you could help clarify this for me. Saugeen Mobility and Regional Transit, in their first half operation report, our ridership has increased by 52.82%, which is a great number. In fact, people are very much using the service, and I think I believe our contribution, just going back to last year's budget, was we started at $30,000, went to 50 to 80 last year, I think, in this year's budget, as our yearly contribution. Those numbers, I stand to be corrected on those, but I think it's around $80,000 or $90,000 per year. With our ridership up 52.82%, Mr. Mayor, is there more than just the ridership that's taken into account for next year's budget, assuming, say, our numbers come in the end of the year at over 50% increase in ridership? Would that number of our $80,000 per year jump to 120, a 50% increase, or is it more than one set of criteria? Is it more than just the ridership? Or is it based strictly on ridership?
It's how it's funded is, well, each ride is subsidized by that 80,000 was based on last year's numbers. So the 83,000, I believe, our contribution was this year. Each ride is subsidized, and it varies on because we have changed the rates early this year, Mike. So, but if you look at the numbers, the deficit still there is, I think, $436,000, the gross deficit. Now that doesn't take into consideration the gas tax or those contributions, but it will mean our portion, as ridership goes up, our portion or contribution will go up correspondingly. And last year we struggled with that because there was a very significant projected deficit because when we had changed ridership fees, the board had dropped the fees from originally they were 80 cents a kilometer, they went to 30. Then they returned that to 50 cents a kilometer. So I hope I answered your question. If the numbers go up, our contribution will go up next year. Yep. Councillor Minaj.
Mr. Mayor, I have three things, and two of them are on this section, and the third one is a request that we have a break before we enter into 7.0. So the first two things are, number two, the Carol Nye correspondence. So last year we asked for there was a list provided to us that were increased levels of service. There was leaf collection as an example, and it had gone, and could it come back? And I feel for these people on this beach area. I've walked that beach area, and we're talking about hundreds of tree trunk, 25-year. For some reason, the trees came down they come down the river, they get out in the lake, and they wash up on Northampton's shore. And I understand it's colloquially known as Northampton. So, they worry that we don't pay them any attention. So I would like to see a list of items be brought forward that we can discuss pre-budget time, put some dollar figures on them, and fully understand what these items are. This would be one that increases the level of service being provided today, supposedly increases the level of service. So we've got a 10% section of beach area that we're saying, we're blowing them off and saying, we're not going to do anything for you because we're already busy doing everybody else's beach. I don't buy it, and I think that I'd like to see it in writing. Thank you. The next one is the Chamber of Marine Commerce. I'm hoping that we would be interested in that. And if we're not, then I'd like to know why. Thank you.
Okay. So I think one question, I guess I can answer one of them. I think, I was a little, when you talked about pre-budget, I think we can certainly ask Stuart to come back in our budget deliberations about increased service levels for that particular area of the beach and include some numbers on that so that we can discuss that at budget time through this next cycle. The second question, the Chamber of Marine Commerce, I think membership is $2,200. I would like to know what value we think we would get for that $2,200 that we aren't getting somewhere else. That would be my question. And be quite honest with you, that is a commercial organization around commercial shipping, and people that have very big harbors often join them. So I really see very little value in Saugeen Shores spending $2,200 to join that, my opinion. So I think we'll go here.
My comment is really about, what number was it? 4.81, which says we were not considered for a grant because we submitted something that the dollar value didn't match the program. Just as a comment for future reference too, when we're seeing all these grant opportunities, we have little pockets of expertise in terms of writing them. I think it's time that we considered the ability to have a person dedicated to finding money for us. And so as we move into the budget process, not necessarily creating a new staff person, but perhaps taking an existing staff person and getting them the training so that we have somebody who literally this is what their job is, because it seems like every meeting we hear about another one, and we scramble, and maybe we need to develop some expertise in this area. Thank you.
Councillor Grace.
Thank you very much, Mr. Mayor. My question, it goes back to the Carol Nye correspondence and her point number 2, and I know, Stuart, you were going to try to inquire about my question. Somebody had mentioned at the SRA meeting about the fact that Saugeen Ojibwe Nation may be doing some kind of testing. Were you able to ever find out anything on that?
Yeah, we did make a phone call over there, and I can email the particulars out to you tomorrow. Darlene did find some good information. I think there's even a website that there's some values posted on. So we'll get Darlene to send that out tomorrow.
Councillor Dave Mayette.
Thank you, Mr. Mayor. Just a comment too, also about Mrs. Nye's letter. The flavor of the first section of her letter was about the beach and the cleanup of the beach, and I'm glad that she wrote this letter to the council, but not all citizens are going to take the time out to write a letter. But I know I've personally become educated through conversations with people and people reaching out to me over the past little while about similar situations, and there's quite a few of them. And if I'm getting these calls, I'm sure other councillors are getting them as well, that the condition of the beach, the high water levels obviously have caused a diminishing of the beach, so there seems to be more competition for a diminishing resource, and access ways are changing, and people are hoarding, and it seems like the beach wars are starting up, and it's really quite disturbing. But and even the situation with the advent of the piping plover migration, it's all causing consternation and aggravation on the beach, and I really hope that somehow we can find some solutions, and that if any of the citizens are watching that are beachfront owners or beachfront adjacent to beachfront, that they can be patient, that we are hearing their concerns, and we're trying to find solutions that meet both the environmental and the rights of citizens and property owners and things like that, because I really, I hate the idea of people being pitted against one another and people being pitted against the town or things like that when it comes to access to our greatest resource, which is reason for being, as many would put it, as the waterfront. Thanks.
Thank you. Then I guess we'll take a 5-minute break, and 5 minutes, and then we'll do the remaining 3 items. So the next item on the agenda, we have 3 information reports there. One's the mid-year financial review, one's the Southampton BIA benches, and one is an information report on the Common Read. And I don't think we need to go into them in any detail, but if anybody has any specific questions. Councillor Mike Myatt.
But I just want to compliment Stu and the Minister of Natural Resources, and through you, Mr. Mayor, the Clerk. If Council would see this recommendation through, I'd like to send a letter of thank you to the Minister of Natural Resources for their expediency in which they handled our Director of Public Works request to extend our license for treating of common reed along the waterfront. It's a new 5-year agreement, and I think the letter was written, and a month later we had a response from M&R, and our common reed is back with a vengeance in some areas along our waterfront, and I just... I, for one, am really pleased that 5-year license has been extended, and I'd just like to extend our thank you to Stu and to M&R if we could.
I think you can easily do that for us, Stuart. Yes. Go ahead. Sorry.
The second comment I had was about the mid-year financial review, and I just quickly, Stu, there were 2 items in there. The 7D loader, $160,000 was deferred, and the waste collection, under waste collection, 11D dozer was deferred $135,000. I just quickly, and I'm not in a lot of detail, but the reason they were deferred again, Stu, was because
the both pieces of equipment, we just had some, in the last year or two, some pretty big financial investments in them, with the dozer specifically and undercarriage and the loader, some other work this year. So we felt deferring them would be the best interest of keeping our money, spending it more wisely.
Good management. And the other comment I had, Mr. Mayor, was there's an item in the budget that's kind of dear to me, and I'd like to raise it this evening. I asked for a staff report back sooner than later, and that's on the $40,000 that's been allocated in this year's budget for gateway signage. And our Southampton gateway signage looks rather attractive. They've all been redone, and I think they look very good. And our gateway signs in Port Algon were taken down I think 8 years ago. And I know there's been discussion over the years about replacing our gateway signage. It's in the budget this year. I haven't seen anything yet, but I'm just wondering if we could, through council again, ask for that report to come to council sooner than later with some options in terms of what we're doing in terms of purchasing and installing our gateway signs into Saugeen Shores for Port Algon. Our first impressions are lasting impressions, are very important impressions, and our gateway signage is non-existent right now. So I just like to see that hopefully happen this year.
Yeah, I think we can find out what the progress is on easily. Deputy Mayor Charbonneau.
Thank you, Mr. Mayor. I just wanted to follow up on the Councillor Myatt's comment on Common Read. I also would like to speak in support of his request for that staff report. I'm interested in that. But with regard to the Common Read, it's one thing that the Director of Public Works points out in here is the increasingly problematic issue of standing water interfering with controlling Phragmites in these areas because of the lake levels coming up. And it's an important issue for Council to consider. There is a herbicide registered in the United States called, I think it's called Rodeo, which is licensed in the United States for control of Phragmites over standing water. And the Lake Huron Center for Coastal Conservation is currently working on attempting to get licensing for that product in Canada through the federal government, through the PMRA. And I have requested at the Conservation Authority for staff there to prepare a motion at the authority level asking the PMRA to expeditiously register that product for use in Canada. And I think it would be a good thing, Mr. Mayor, if Saugeen Shores were also to lobby the PMRA for licensing of that product. As long as the water levels remain high, it's going to become increasingly difficult, in fact impossible under the current regime, for us to control Phragmites on large parts of the waterfront where there's a lot of standing water. You think of Miramichi Bay as one example where that could become a big issue. And you see I was just recently at the Brucedale Conservation Area where they're doing a project that Lake Huron Center is to control Phragmites, and when it takes over in an area like that on standing water, it is virtually impossible to control. So I just wanted to make that comment, and that this council should consider doing that. Thank you, Mr. Mayor.
I think we can absolutely do that. Yes, Deputy Mayor.
Thank you, Mr. Mayor. 2 comments about the mid-year reports. There's 2 areas that jumped out at me as I read them. One has to do with the building bylaw enforcement and planning services, a couple of paragraphs, and the other one is about waste management. In both those cases, there's an indication that revenues are below budget and on the decline. The building situation and planning services, I think all of us are aware that there are proposals, and then there are proposals that are not followed through on, and then there are proposals that work their way through, and then they get pulled at the last moment. I think there's a bubbling concern there that we should be somehow over the next couple of months paying attention to that area, because there is a perception sometimes that we're not open for business, and certainly declines in revenues fit into that. The one with waste management, though, also concerns me in the same way, in that there's a suggestion that bag tag revenue's down, the landfill revenue's down. Now, we've just made a decision to outsource a service for a budget amount that the revenue that generally speaking, it was supposed to be a break-even kind of thing. The revenue's declining, but we're setting it up so that we will have a set fee that we pay regardless of the revenues. And I'm just concerned that there's an imbalance there that's about to get bigger. And I really don't have a question in there. It's just an observation and a comment and a concern. Thank you.
Councilor Minaj.
Thank you, Mr. Mayor. I have a couple on the same report, two for Stu anyway, just quick ones if I could. Need to understand more about the sentence that talks about the amount charged out to user fee funded departments maybe have to be increased if it is determined that part of the overspending can be attributed to vehicles held by them. So my question is, if this is a fuel cost issue, it's got two parts. Who are the user fee funded departments? I've not yet heard that term used internally. I have a good guess, but I've not yet heard that. And I thought we were moving to both garage areas with both fuel depots being used with a corporate card to monitor the uses so we would know exactly who those were. So that would be my first question. The second question is right below it, streetlights. I wanted to know if we were finished with the conversion project or what percentage are completed. When is it expected to be completed? So those are to Stu, then I've got two more quick ones.
Okay, very quickly, the fuel system will be operational by the end of this week, so we will be able to track fuel from both both shops, and then be able to more accurately transfer at the end of the year. Also, the other indication there is to do with fleet maintenance, and we will be moving into that. Next year is the plan right now to be able to better allocate those costs directly instead of just an estimate at the start of the year. With respect to the streetlights, the project is about 98% complete. We're just awaiting delivery of the concrete poles for Parkwood Drive. And I think there's about 10 outstanding issues. And I was speaking to West Ontario Power today to finalize the flat rate reduction fee. So we're very close.
I think the one question about user fees, and I think you were probably talking about water and sewer rates, sewer services there. Yeah. I think that's probably what you're referring to in the report, right, is water and sewer and building, yeah.
Okay, thank you, Mr. Mayor. So one quick follow-up then. There are a number of streetlights on Green Street that have not been done. So I'll photograph them and send them in to you, Stu. So my next questions are about the pool, and it talks about wages are significantly higher than anticipated for the first half of the year and are also up year over year. So did we increase the programming there knowing that we were going to go into a 6-week outage? Why are we significantly higher in wages? What does significantly higher mean?
I don't want to put you on the spot, Sue. No, I think that question probably should be directed to Jane, and you can give her a call tomorrow or send her an email.
Okay.
Councilor Grease.
Mayor, I want to just go back to the common read issue, and I'm interested in the Deputy Mayor's comments. And it sounds like a really great thing for us to be doing to support that kind of use of that kind of pesticide. My question was going to be, what kind of pesticide are we using, or is it a combination? Because what I read about is that the type of pesticide that the Deputy Mayor referred to, rodeo, is a glyphosate. Are all glyphosates prohibited? Maybe one or the other of you could answer this in Canada. Are they all as equally effective in standing water? Because I read that that they are more likely to not be injurious to non-invasive plants. So that would be another reason to use them. I just am wondering, are all glyphosate herbicides prohibited in Canada? Do you know?
So I I usually bring all the information I need.
Okay,
I didn't bring my pesticide
I should
binder,
have asked you this.
but my understanding is that the Roundup that we do use is a glyphosate, and it is not approved for standing water. We do use an additive that's a can't think of the word right now, that allows it to adhere better to the, there you go, thank you, to the product. So yeah, I'll certainly be looking into this rodeo thing.
Thank you. If there's nothing else, then we'll take a motion to adjourn. Councillor Mike Myatt and Councillor Don Matheson. All in favor? Adjourned.